What is up, guys? Welcome back to the channel. In today's video, guys, we're going to be taking a closer look at my portfolio's performance as a dividend growth investor thus far. I'm currently invested in 3 ETFs: the Vanguard S&P 500 Index, the Vanguard High Dividend Yield, and then the SCHD US Dividend Liquidity. We haven't updated our portfolio for about a couple weeks now, so there's a lot to unpack in this video, so make sure you guys like and subscribe, and let's hop right into it. To start off things right, guys, my portfolio has returned 2.22% with an unrealized profit of $81.86. The total amount invested across all 3 ETFs is roughly $3,700, and the current allocation is as follows. VU makes up 35.5% of my portfolio, SCHD accounts for 34.3%, and VYM makes up the remaining 28.7%. Since my last video on March 7th, I've received a total of $15.82 in dividend income from my 3 ETFs. VU has paid $3.45 on March 27th, VOM paid $4.49 on March 20th, and SCHD paid $7.88 on March 25th. All these dividends were automatically reinvested, and I'll attach screenshots to what's going on in my brokerage and whatnot, but all of these have contributed to the growth in my portfolio and the returns thus far. My investment strategy is centered around the long-term goal of achieving both capital appreciation and a steady stream of dividend income. To achieve this, guys, I have carefully selected a diversified portfolio of exchange-traded funds that align with my objectives and my goals as a whole. Firstly, guys, I have allocated a significant portion of my investment to the Vanguard S&P 500 ETF, or VU. This ETF offers broad exposure to the U.S. equity market by tracking the performance of the S&P 500 index. The S&P 500 index is a widely recognized benchmark for large-cap U.S. equities, and by investing in VU, I am effectively investing in the 500 largest publicly traded companies in the United States. This investment strategy aims to benefit from the long-term growth potential of the U.S. economy. Secondly, I have also invested in the Vanguard High Dividend Yield ETF, VYM. VYM focuses on stocks that pay above average dividend yields, so by investing in VYM, I'm essentially aiming to generate a passive income stream from the dividends paid by those high dividend yielding companies. In addition to this, I believe that dividend-paying stocks tend to be more stable and less volatile than non-dividend-paying stocks, which aligns with my long-term investment horizon. I apologize. Lastly, I've included the SCHD US Dividend Liquidity ETF, SCHD. This is one of my favorites as it focuses on U.S. companies that have a strong track record of consistently paying dividends. So by investing in SCHD, I'm potentially benefiting for capital appreciation and as well as the steady dividend income provided by those dividend-paying companies. So by combining these 3 ETFs, guys, I believe I've created a well-diversified investment strategy that is focused on long-term growth and dividend income. I'm confident that this approach will help me build a solid foundation for passive income in the future, while also allowing me to participate in the growth of the U.S. economy. I've consistently invested $200 every week and continue to dollar cost average, but as always though, guys, I'm remaining vigilant and cautious, but otherwise very confident in my portfolio's holdings and diversification. If any market downturn really happens, I'm pretty confident in my holdings and how they'll stand up against that. So other than that, guys, make sure you guys like and subscribe. I know it's a short video and one video this week, but the thing is I'm sick. I got a lot of things I got to do this week so far, so I got a lot of things to catch up on. So next week I will have an SCHD analysis breakdown, so make sure you guys tune in for that. But otherwise, sorry for the short video, and I apologize, but thank you guys so much, and I will see you guys in the next video.